Thank you for having me.
All right, so now let's head to the market and see how that closed. I must tell you that the NGX is, well, they look so good yesterday, or do we say it didn't look so good, or just look normal? Normal thing is there will be profits, there will be bargain hunting, there will be cherry picking, and then there will be profit taking. So profit taking is what happened yesterday at the NGX. Let's look at the numbers. At this time, we saw that the NGX was down at the close of trade. If we could have those numbers on the board, that would be really, really nice. The NGX dropped yesterday by 0.11%. Thank you so much. But we're still hanging on to our 104,000. So it's 104,553.31. And we're still on 59 trillion naira after losing just 62.21. I mean, we've gained a whole lot more than this. We've gained more than 200 billion. So we can make do with this, with this drop right here. When we look at the activity board, we see that the volume was green, but value, which was the star yesterday or 2 days ago, dropped 29.69% to close at 7.59 billion naira deals, about 9,500 after gaining about 5.20%. The sectors, the banking not shining as much, but it gained at the close of trade more than 1%. Consumer goods 0.16%. Industrial 0.12%, insurance sustaining the bullish recovery that it has found. Oil and gas still marginally up right there, 0.04%. And the top trades yesterday, FBNH, UBA, and Accessco, the Fugas are doing their thing again for a second day. Maybe today we'll see Zenith Bank also right there, considering that we have a first female CEO or group managing director over that institution. Now let's look at the unlisted market. Unlisted market is recovering. We see a slight gain, not slight, more than 1%. That's not slight. 1.04% at 1,064. Market cap right there at 1.44 trillion naira. Activity chart for the unlisted markets yesterday was the volume was green, value in red, deals in green. In fact, value was up more than 57%. There you have it right there. And then we saw deals 22 and stocks traded 10 stocks traded yesterday. That's for the unlisted market. We had some changes coming right there. I hope it to be a positive one, but we'll keep our ears close to the ground and report them to you. Let's head to the fixed income market now. There was an auction on Monday. We hope to get the results from our analyst. But let's see the numbers at the close of trade. 50 deals yesterday worth 83.01 trillion naira. We can see a lot of activity right there in the February 2034 deals. That's for the bonds. The Treasury, I think we'll see more on the short security. 21st of February 2034 had a lot of activity. 26 we see their deals at the close of trade worth 83.01 trillion naira. Look at the Treasury bills, the interesting one these days. This is where the foreign investors seem to be showing more confidence, even though the secondary traded relatively low, but had 21 deals at the close of trade. There you have the March 2025, and the worth was 18.89 billion. A bit of a calm right there after that auction on Monday. And OMO, that's the open market, had 16 deals worth 77.60. And then we had a February 25th, 2025 security with 10 deals yesterday. Let's talk to James Adisa. James Adisa is a fixed income dealer with Chapel Hill Denham. Hi, James. Good morning.
Good morning. Thank you for having me on the show.
Yeah, so we see that the secondary market's a bit calm, but let's start from the auction. The auction on Monday, what's the results? What was the reaction to the market or to that auction?
Okay, so at the fixed income, in the fixed income market, in the primary market to be specific, the DMO on behalf of the federal government came out to raise 450 billion naira. We saw total subscription sit at around 615 billion. So the auction was oversubscribed by about 158 billion. And that translated to a bid to offer ratio of around 1.4 times. And what we saw was that, most of the three instruments that were issued One was a new instrument, and the other two were reopening. And at the 10-year bond, we saw the yield cross uncharted territories. For the first time, we saw yield go over 20%, and that's quite interesting. I think that's really where the insight is, because investors are now looking at the 10-year bond and saying that I can buy a 10-year bond at 20%, above 20% actually, lock that in for 10 years, as opposed to buying treasury bills at around 27% effectively, which can be refinanced in a year and at a lower rate. So we saw a significant amount of the demand being skewed towards the 10-year bond, and that was really how the auction played out.
That's different from what we've been having, because we've been seeing the shorter securities more attractive, especially to the foreign investors. But how much of foreign participation did we get this time around?
And so for the bond auction, there was really no clarity on whether foreign investors or domestic investors dominated the demand that we saw at the auction. Right? So it's not really clear whether foreign investors, were really the drivers or were aggressive in buying the longer dated instruments. But one thing is clear, the marginal rate which they issued the 10-year bond at is clearly attractive to investors.
And now, of course, the higher it gets, or the closer it gets to the inflation rate, the more attractive. But this gap is wider now. We have inflation at over 31%. So, I mean, 20, we're celebrating because we're doing 20-something before. But now the gap is wider. But it looks like this is not deterring investor sentiment.
Yeah, so, I mean, foreign investors would probably prefer to stay at the short end of the curve, like you mentioned, and with inflation at around 31.7%, effective yield on treasury and OMO bills at around 27%, really the gap has narrowed. And one thing is clear: the CBN is really in this game of mopping up excess liquidity, keeping interest rates high, and expectations for the Monetary Policy Committee meeting is that there will be a further increase in interest rates, key policy rates to be specific. And if that happens, we'll see a repricing in treasury bill yields, and we'll further see the gap between the MPR and the treasury bills or the money market instruments narrow. So I think that if they continue to attract this or offer this attractive rate, we'll still see positive sentiment in fixed income markets, and we'll still see a lot of investors being attracted to the fixed income market over other markets. But there are still opportunities that abound in other markets. Nevertheless, we still think that yield would possibly trend higher.
So I mean, it looks like the CBN is getting the results, or at least on the path of getting the result that it's looking for. That is mopping up some of those money supply. What do you expect, or what have you been hearing about expectations as the MPC sits again next week, Monday and Tuesday? Do you see more rate hike? How does this feed into the market?
I mean, market expectations, right, are that the CBN will remain hawkish. We see that they are definitely going to offer more attractive rates because they are in the game for two reasons: one, to attract foreign investors, and two, to mop up excess liquidity. And our expectations are that they will do somewhere around 200 basis points, possibly, at the next Monetary Policy meeting.
All right, thank you so much. Oh, just before we let you go, what's the expectation for the rest of the week? Trading quiet?
So system liquidity is tight. They've really been mopping up this excess liquidity. Bank balances are tight, and we expect to see this filter into the market. With investors investors offering little amount of money or having little amount of money to come to the market to play, we would expect to see them bid for higher yields in the fixed income market. And so we might still see yields possibly trend higher, right? But overall, given that system liquidity is tight, markets will possibly remain quiet.
All right. Thank you so much, James Adisa, a fixed income dealer with Chapel Hill Denham. All right, so that's it on this side of the show. We now go back to Sunrise Daily for more strong and current conversations they always have for you.